morning, everyone. Welcome to the Trading Market Technicals morning call video for Wednesday, April the 3rd. Another update yesterday in the markets. Markets took back what they lost on the previous day. Dow up 89, dollar up 17 cents, gold down 26. Precious metals took a big hit. We'll take a look at the gold miner index as well. NASDAQ up 15, S&P up 8. Now, real quickly, just want to go through the economic data that's coming out today. ADP unemployment report for March. It's going to be released around 8:15. They're expecting 205 versus 198. ISM non-manufacturing index for March is going to be released at 10 o'clock. They're expecting 56.0, unchanged from the previous report. And then we have our normal weekly crude inventories coming out at 10:30 this morning. Okay, so interesting day yesterday. Markets were up, gapped up yesterday. We did get a little bit of a pullback in the intraday session, sometime right around lunch. We were overbought intraday, as we are overbought on the daily and weekly charts. Again, not a sell signal to go out and short the market, but we are continually seeing increase of market divergence, not only from our indicators but now from our leaders, our sectors that lead the markets higher. My job here is to inform you and to educate you for the people that are looking for that education and dissect the markets internally so that can help you be a better trader for the day, swing trader, long-term investor, and that's how you have that little bit of an edge that you need. Now, when you're day trading, it is a little bit different. Obviously, what everybody says, Mark, what are you doing? And I'm looking for the best trade setups. I am a trend trader. However, I will sell relative weakness to what the markets are doing, because when that happens, usually there's a downgrade, some real bad news out on a stock, and it's really not going to care on what the market is doing. And that's my little edge to say, well, markets are up 6-7 days in a row. Just for example, I'm not looking to buy the market here on another gap up. So that being said, I want to roll right into our indicators. I want to show you what yesterday I had mentioned on the bullish percent SPX. We were on another buy signal. Now we are back on a sell signal while the market's grounded higher. So having trouble here, continuing to push higher the bullish percent index S&P. So this tells me as we get this choppy formation in price, you're going to have an up day, a down day, an up day, a down day. That's telling us the markets are trying to carve out a top. Topping is a process, aside from bottoming out. But we need to be diligent. We need to be patient on our trade setups, because, quite frankly, the markets are a little bit crazy, if you will. We have a lot of algorithms going nuts, high-frequency traders actually just hitting that button, and when the markets are just probing for more bids, more offers and more offers, you're going to get that market to be exactly what you see here. So that being said, just use caution. Don't get crazed on what's happening with the market, because if the market, I see a decent sell-off coming here. It can't just continue to grind higher. It has been, to me, a phenomenon that the last 3 months we've had nothing but a couple of small days down, 1 or 2 days down. The one big day was the Cyprus over the weekend 3 weeks ago, and then that was really it, off to the races again. As you can see here on our S&P chart, this is just a little bit absurd that we like to have a down day and 2 up days, down days, 3 up days, down day, so sort of a stair step. But when you have markets that are just continuing to grind higher, it is a runaway market. You have to be diligent and say, I'm not going to add to my long position now at these levels. And if the market goes, so be it. Let it go. Don't be adding anything if you are a swing trader or position trader or long-term investor. Again, for the day trade, it's not going to matter as much. All right, let's take a look at our NYMO. Again, has gone nowhere. Absolutely nowhere. It's just seems like the indicator is kind of stuck, but I just wanted to basically show you that. Now let's take a look at the NASDAQ, the NYSI daily chart. Now I brought that, as you know, the weekly chart that we look at for signals is on a sell signal. It went back on a sell signal on Friday. Take a look at this now. If you can look at how this indicator is pretty damn good. If you look at the RSI, we got really overbought up in this area here, and now we're starting to come in. Same thing here with the indicator itself. Made a lower high from the high, and if you look at the areas here, we picked the bottom here, right? Top up in this area here, market started to roll down. Bottom in this area here, top in this area here, market started to roll across sideways. Now we're in this area here, so the market could push back up to 1,000 again, and then fail. So you know you can always get that one more big push, but I'm looking for another big breakup. But I want to see capitulation. I want to see everybody excited about the markets, which they are, and I want to see everybody talking about the markets. I want to see a big bounce up, gap up, and then fail, and then sell off and close on the lows. That's when you know you basically have some sort of a top in place. Until then, you know, up 60, up 50, markets will continue to grind high. There's absolutely no fear in the markets. That's another red flag for me, and I'll just show you that by the CBOE. We have really gone nowhere. We were up here on that one. Believe that was on Monday. We had that little down day, and now we're back down below in a bullish reading again. Okay, so just keep an eye on it. Be very cautious here. I get very nervous when I see things all one-sided. Again, I'm just day trading for the day, so I'm looking to pick my spots, managing my risk accordingly. Tight stops, because this market could literally change on a dime, and when it goes fast, it goes real fast. So just please, you know, be aware of that. As you can see here, we have done nothing on the VIX for 2 weeks, so we haven't sold off and we haven't really spiked higher. So this is interesting. I'm going to keep watching the VIX during the day. VIX and the transports, the Russell, the Nasdaq, copper. These are all indicators will give you good insight. And we'll talk about NASDAQ, and we're going to talk about the Russell itself and the transports. Okay, now take a look at the, I showed you this yesterday as well, stocks that are above the 50-day moving average. The index is moving higher, right? The Dow is moving higher. The S&P index is moving higher. Stocks aren't. They're actually rolling over. We have another market divergence on our indicators here. So please use caution. Again, if I were a position trader, or if I had positions that I'm holding, which I'm not, I would be buying protection. Whether it be protection, at least it's well worth spent. You're protected, and then you could ride out the storm. Anything could happen here. Anything. I mean, the markets are literally vertical. Okay, let's go right into our index chart. Just wanted to show you the USO. We broke out of that bear flag. Now we're just hanging above here. We had 4 or 5 inside days above the 50-day moving average. Kind of constructive. We're consolidating here. I think we can get a push back to the 35 area in the USO. Gold miner index, taking away the inverted head and shoulders. We did have a trigger. We didn't break above the 38.75. We sold off miserably. I think the index can be down at least another 5 to 10%. That's what happens in the precious metal sector. When they go real hard. So if you're long, be very careful. Like I said to you before, this here for a trade is all it is right now is for a trade. I would not be looking to pick a bottom in this. Gold got smashed down, I think $25. The GDX was down pretty big at one point. And as you can see here, big engulfing red candle is not a pretty picture here. This is closed right at the lows here, 35.70. A break and close below that area, 35.50. I think all bets are off, and you're going to see some continued lows here in the GDX. All right, and now here we go with the spiders. We actually closed higher above the previous day. We're just sitting above this little sideways consolidation. Probably looking to break out to the 158.70. We have all-time highs being marked on several of the sectors here. Here is the 60-minute chart. As you can see, our indicators are starting to roll over again, pointing lower, but we're hanging out at the upper end of the range here, which is bullish. We did get a little bit of that pullback right around lunchtime, and then we popped at the end of the day. 30-minute chart, as you can see here, for literally weeks and weeks, we have been in this channel. We did break out now. Now we're above the channel. So let's see where it goes. Let's see if we can take out yesterday's high. 157.27 is what I'll be looking for today. 157.27, excuse me, and or a break below yesterday's pivot of 156.24. So we'll keep an eye on this. But as you can see, it's been really a really non-event for the last 2 weeks as far as trading is concerned. Here's the S&P cash for the daily, 1575. We'll take out our all-time intraday high, so to speak, 1575, 1576. 1555 will be support, 1530 support, and then down here. But we'll just, again, let's just keep an eye on what's happening. Be diligent about what you're trading. Now, here is the transportation sector. You have the S&P and you have the Dow followers leading this market higher, and now we have risk off coming off of the transports and the Russell. These are the two leaders breaking down. We have the EEM, the emerging markets, breaking down. China breaking down. This here is a big sign, guys, to be very, very careful with your long positions. Okay, if this continues, there's basically no way that the S&P and the Dow will continue to run higher with the transports and Russell lagging. Okay, that's the big ticket here. Is that now the transports and Russell could turn around and catch up and play catch up and then start leading again. So just keep that in mind. This is not right now to sell the market. We want to see breakdown of pivotal lows and price making lower lows in the other indices. We want everything in sync with each other. Right now we have market divergence. This is a big red signal for me anyway. Here is the IWM's Russell, a great gauge of risk off. Look at our indicators rolling over. Momentum is waning, and we have two big distribution days. So this here is not a good sign if you are long and looking to trade this market higher. This is really nerve-wracking here, because if the market breaks down again, you could get a big reversal even in the intraday time frame. Okay, and then here's the XLF, basically inside day from the previous day. Really has done nothing for the last 6, 7, 8 trading days. Here's the diamonds. Again, diamonds broke out. Diamonds have been leading the charge, which is the Dow Jones. Really have been leading, as well as the transports at one point. But this is what I don't like. I'm not really crazy about this, seeing the Dow breaking out and Russell and transports are not. Okay, a couple more charts for you guys. Here's Apple, broke down here the last several days, held the low, basically up a couple of points here. Again, this is just a trading stock. If you want to look to build a position, you're going to probably do it in the mid to high threes. That's where I think this is going right now, and then we will reevaluate it from there. Here is the SMH. Again, semiconductor index not going anywhere. Actually sold off yesterday. So that's not a real good sign of what there is to come. So I do see some sort of a sell-off. Plus, remember, seasonal trends, we have market weakness in this time frame. We have somewhere in this area, right around April into the spring, we do have some seasonal weakness. Doesn't have to happen, but I just want you guys to be aware of it. Lastly is the Qs. They get a little bit of an update, trying to break out of this sideways consolidation. But with the semiconductors breaking down, you're not going to have much movement in technology. All right, guys, that's really about it for today. Have a great day. Really be safe out there. Don't put on too much risk yet. Let the markets digest. Let's get some sort of a pullback, a decent correction here. And then if you wanted to play the markets higher, I think you have a better chance of success that way. Have a great day, everybody. We'll see you tomorrow.